Hey everyone, welcome back to another weekly analysis update. First of all, before we start, I just want to mention that ideally I want to get these out on the weekend before the trading week starts. However, I've been working away all week and weekend and I've not really had a quiet environment to sort of sit down and record. Even in this video, when I was recording, still not the most ideal. You'll hear sort of office chatter and background noise, but it was probably the most suitable place that I could. Location and background noise wise, so please appreciate it was the best I could do. There's still a little background noise, just please ignore it and take in the value that I'm giving away in these videos for free. I've been busy, as people seen on my social medias. I've been at the Financial Magnates Summit in London. I've been at Bloomberg HQ. I've just been on the move here, there and everywhere for business. I finally got settled in a quiet-ish location to bang one of these videos out, so just please appreciate it was the best I could do at the time, and I still managed to make things work even when things weren't ideal. But yeah, please don't let that put you off. There's still a lot of value to get through in this video. It was a little bit longer than I would have liked, but I guess on the other hand it's more value for you guys that are out here trying to learn. So yeah, let's get straight into it. What's going on, guys? Hope everyone's good. Welcome back to another weekly analysis update. So in today's video, I'm going to go over all of the open positions that we've got, all the changes in them, any new positions that I've entered. On the free video, I'm going to go over 3 new positions that I'm looking to enter. And then in the premium side of things, in the VIP channel, I'll go through all of the positions that I'm going to enter and any day trades that I'm looking at taking, as well as swing positions. So let's kick off getting straight into it. We've had a total of plus 2.5%, which I'm going to break down in this video. So we'll start things right off with the, let's go in alphabetical order. Aussie CAD, literally we've seen a big shift in the Aussie dollar in the past week, which has affected quite a few of our positions. Obviously based on our strategy, one position might falter, but the rest will pick it up accordingly. So Aussie CAD was unfortunately the position that reversed and hit stop loss, but it is what it is. We had enough reasons to take the trade. We had a significant rejection. It did actually sell off. I believe our break-even level, which is at 1-to-1, was just missed. So what that means is that if price came from here to here, aka 1-to-1, we would have set our stop loss to break even, making it risk free. But since it didn't hit that and I followed the strategy, we didn't go break even. And it's just one of those things. It happens. Obviously, we're still up overall for the week, so you have to just be comfortable taking loss in trading. But it doesn't mean that this wasn't a trade to take, okay? Trading is not a science. Just because you do the right things don't mean that the trade's going to win. This is just an example of when you do everything right and the trade still goes against you. And there's also times when you can do things not right and it will luckily go your way. This is just one of those things. But as you can see from the rest of the video, which I'll go into, you can have a losing trade and still have a winning week. So it's really not that bad. But yeah, one losing trade this week and it just happens to be Aussie CAD. Second trade we'll get into is Aussie JPY on the 3-day time frame. So here's the entry that we took down here based off of, let me reload the trend. It would have been 1 touch here, 2 touch there, 3rd touch here, which we entered based off. So I went over this in last week's video if you didn't see already. Don't let these, I'm going to delete it for now just because it might actually get confusing, but don't let that section of things confuse you. Let's delete those. So here's the active trade that we're looking at. We had 1 touch here, 2 touch there, 3rd touch there. So this is effectively the gradient of the price trajectory that we're looking to trade, so aka the trend. It also, you can see the exponential moving average, the EMA, that you can see is being used as support. So here it's supported price higher, here it's supported price higher, here it's supported price higher. Guess what? We then analysed this region where price was coming back to, in line with all of our other confluences. We analysed that it could possibly be an area that price would be supported. So we bought. We had a sensible stop loss, which was below this low, and we set our price targets based on the Fibonacci extension levels, which I'll show you there. So we look to take 50% of our position off here, which we did. So we took 50% of 3.66, which is about 1.83. So we made 1.83% profit there, and we also made 4.6% profit there within last week. Obviously, the first take profit was hit before last week's video, so I've not counted for this profit in this week. Purely the actual change within last week's video, which was just this. So we took 25% of 4.66%, so about 1.16 to be precise, rather than guessing. So yeah, all playing out pretty well. So you will have seen as well, we are now also looking for a re-entry. So I'll leave that on there just because it's nice to know. But we're looking for a re-entry now on the 2-day time frame. So you can see 1 touch, 2 touch coming in for the 3rd touch here. The 3-day time frame was used here because the EMA aligned better with the entry. But you can see that the 2-day time frame is also being used as support. We've got support, whole lot of support there. Yeah, etc, etc. You can see every time price comes down to this EMA, people see it as a very good price and start buying it, therefore the price goes up. So this can essentially be seen as like a discount line in this example. Once price returns back to the average price, which also encompasses all of the previous price data, it gets supported. So it's another reason to see that price is in an uptrend. When price returns to its average price, people think it's undervalued and buy more of it, which is another definition of an uptrend. So 1 touch, 2 touch, looking for the 3rd touch. Here we see the 2-day EMA is aligning a little bit better. If price does go a bit stable, we might look to take it on the 3-day, but just provisionally for now, I'm using the 2-day time frame to align it. Move this one out of the way. We've got the Fibonacci retracement level set from this low to this high, and we're going to look for a quarters level in between these Fibonacci levels, so 95.25 in this case. Let me just make that accurate. So ideally, we're looking for a price to reach this level, coincide with the EMA, coincide with the trend line, which also coincides with a huge structure level in the market. So we don't just set up this level blindly and just trust that it's going to fit within that zone. We'll look to the left of price and see where price was previously used as structure. So here price was resistance, here price was support, here price was resistance, here price was resistance, etc, etc. So these are key levels within the market. That it's not just like a line going through price, like it actually equates to a real value for the ratio of the Aussie dollar to the Japanese yen. And at this price, the market is determining it's undervalued and it's going to increase. So yeah, all those confluences in a line. We're looking for the trend line, we're looking for the EMA, we're looking for the quarters level, we're looking for previous structure points, we're looking for the fib levels. Then once price does come down from here to here, we're going to look for significant wick rejections in the zone. Obviously, we don't just want to be blindly buying when price gets to that point. We want price to get to this point, and at that point, we'll see, is there significant candlestick rejections, such as dojis, such as shooting stars, such as hammers? If so, we'll look to buy. If not, we won't buy. Simple as that. So all those confluences in a line, and then we will look to buy price here. CAD Swiss on the 3-day. This one hit TP1 as of last week. So that was a 50% partial take profit of 2.1. So we made just over 1% on this position last week. Reasons for entry, get up the weekly. So we see 1 touch, 2 touch, 3rd touch. You might think this is 2 touches, but it's not. It's like one collective touch, because it's all one high. Okay, so obviously if you analyze this is all one high, then this is the low, then this is one high, then this is low. It's just a coincidence that the same sort of wicks sort of penetrate each other, but don't be mistaken into thinking this is 2 touches, this is 1 touch. So you got 1 touch, 2 touch, third touch to make the trend. Obviously we analysed it was aligning with both the 3-day and the weekly, so we set the entry above the 3-day, and then the stops above the previous high. We gave ourselves enough room to say that, okay, price might come all the way up and double top, but as long as it's still a lower low or an equal high, we're still in a downtrend, so that's why we have the stops above the previous high, which held true. And although we had a bit of drawdown, price came back in our right direction. We're now risk-free and we've cashed out 1% of the position, and now we just let price continue to fall to hit the other take profits to make 3.9 R altogether. CAD JPY, we've got this previous open position. It's hit TP1 at this level. So there it hit TP1. It hit TP2 here. So we're already 75% of our position closed. We're purely waiting on TP3, which is this one, to play out, if it plays out. So we've just got 25% of that position running to hit the final 5R. Within that, we've managed to catch a re-entry from this EMA, which has long been supported since the 28th of April this year. We caught an entry here. Price hit our 1-to-1 level, so obviously well beyond 1-to-1 there. At that point, we set our stops to break even, and then price retraced, and it's just hit us out break even today. So this one's closed out at 0 altogether. So you can see CAD JPY, what happens when we go stop loss to break even and then break even gets hit, it's literally just 0. It's as if you never entered. So good professional risk management there. I wouldn't look, although you could probably get an entry here if you use the same strategy. Because I previously had an entry, got stopped out at break even, I won't then re-enter. If you do re-enter after getting stopped out, your emotions are somewhat making you do that, because you're like, we call it revenge trading. So you're trying to get revenge from the first position because it was wrong. And it's just not a logical way to trade because there's emotions involved. Trading shouldn't be emotional, it should be logical. So for that reason, I don't re-enter my positions at break even. The only time I would is if they've hit a TP1. If they've hit a TP1 and then come back down, you can sort of re-enter because it's sort of stacking your position, because it's already gone in your favor. You are then just catching another leg on the trend. However, in a situation where my break-even's hit before it's broke the previous high. So for example, let me map it out, right? So if we took this trade and it hit our TP1, but then came back down to this level with all the EMA and all the other confluences aligning, I might look to re-enter, yes. Reason being, the fact that it's hit TP1 means that it's made a higher high. Okay, so it's still an uptrend and prices get reaching higher highs, and then this could be the higher low. So then we are following higher high, higher low price. But that's not what's happened here, right? So what's happened here is price didn't make a higher high. Price made a lower high and then reversed, which is a sign of weakness. So it's not ideally something we want to be buying back into. If we were buying back in, it would purely be based off our emotions because we couldn't stand being not making money the first time around. So I hope that gives a good indication of revenge trading and stop loss to break even. But yeah, this is just 0 here, guys, and we've already got 25% still running, so it's not the end of the world. Euro Aussie dollar. This one is risk-free. It's hit our 1-to-1. So again, our stops have gone to break even and we're running a risk-free trade. And you can really see the accuracy of this strategy when it's right. Like the drawdown, this one was pretty much like pinpoint perfect. This one just caught a wick. That just caught wicks. This one again, as soon as we entered, it took off straight away. And stocks got break even, got stopped out at break even. But yeah, when the strategy's right, it's really right, which is why you can have sort of high R's, like 4+ R's. And then when it's wrong, you're wrong. It's not the end of the world. Obviously that one was a little bit unlucky, the fact that it didn't hit our 1-to-1 level. But like I say, you win some, you lose some, it is what it is. Next position, Euro Swiss. This one's just sitting at break even. This is a new position, I believe. Yep, new position. So we have this trend, this downward trend. We have the EMA, which is also being used as resistance previously. Price has failed to break above it since the 4th of April this year. It did close above it on the 3-day time frame last week. But now we're seeing price sort of tweeze the top and come back into the range, which is what we like to see. But yeah, we had the trend, we had the EMA, we had the sort of fib level set up where we had 6 days of indecision within our golden zone. So then obviously we looked for a significant price level, which I determined was 0.965. I believe it was just the liquidation of those highs is where I looked to enter the quarters level based on the liquidation of those highs. That's where I entered. Price has just tweezer topped once, tweezer topping twice today. Still around break even, but it's a pretty new position. So we'll see where this one goes. And this will be a 7R trade in total if it hits our TB freeze. But I guess we'll just see what happens. Euro GBP on the daily. I believe again this position, we made the last video on the weekend, which meant TP1 was already hit, so I've not actually accounted for this in the last week's profits. Yeah, so this one was just NFA. No further action since last week. Last week we were at a point where we hit TP1. We'd already made 50% on the position, so about 1.18. Again, NFA, it's just teetered around those highs, triple topped. It'll look like price is coming back down, and we are looking for a stack on this position. So we've still got the trend being obeyed, still got the EMA being obeyed. We're essentially just looking for another point within this trend that we can safely and smartly buy back into price and trade it higher. GA, I actually closed this position early based on the push up in Aussie. So we saw the Aussie dollar have a great push. This one, after sort of looking at the top down, obviously you've got the break of this uptrend, but we were sort of buying based on the third touch of this trend with the EMA support. If we look at the monthly, do a bit of top-down analysis, we can see we've got 1 touch, 2 touch, third touch here. After the third touch of this trend line, we had a bearish engulfing on the monthly candle, which was also after 2 monthly hanging man candles, a monthly shooting star, and then a 2-month tweezer top. Yeah, probably not the best place to be buying in hindsight, so I managed to cash this position out. Although it did really obey our entry. Again, you can see the level that I called out was pretty pinpoint. Like once it hit this level, it bounced off after. But again, I just decided I wanted to cash out of this position, and we cashed out. The members were alerted to cash out in this position on Friday, and at that point it was about 0.5%. So nothing wrong with that. We made an extra 0.5%. But yeah, you'll see it a lot in my strategy because it's a lot more slow paced. If sort of price sort of goes against your reasons for entry, and your confluences are no longer confluences, you have the time to just get out of the trade for like a minimizing loss. So it's really good because sometimes losses aren't even losses. Like here, what I'm determining as it's not gone our way, we've made 0.5%. Okay, so some people would probably sell their left arm to have a strategy like this. So yeah, we got out of GA, we made 0.5%. We've decided we no longer really want to buy it, and we made a win. So pretty smart trading. Pound Swiss. Since last week, we had an entry on the 3-day. So the level that I called last week, 1.1125, we literally again had a pinpoint entry on this. Pretty damn pinpoint, if I do say so myself. You can check back to last week's video. At the time I recorded and posted last week's video, price wasn't even here. So you can check back to when I recorded it, and you can literally see 1125 got hit perfectly. It's almost like I know what I'm doing, guys. That is an institutional level, okay? So when banks and institutions place their orders, they don't think I'm going to order off 1.11695. They're going to choose a quarterly level based on a multiple of 25 pips. Ideally, they'd like to hit round numbers, so numbers of 100 pips. Second to that, they'll go 50 pips. Third to that, they'll go 25 pips. But you will always see the quarterly levels getting hit. Every 25% pip range, that's where I'm looking for my entries on the high time frames. And this just really showcases why, because it's levels that when price hits this level, huge orders are coming in and the market's getting moved. Okay, so we can be precise with our entries, which gets us RRs of 4 and above. So with all the other confluences, we had 1 touch, 2 touch, 3rd touch. We had the EMA being used as resistance. It did get tapped into resistance there. I believe, yeah, within last week's video, we already had this tap. We had the shooting star. This was my reason for entry in the first place. And I said, yes, price is dumping off, but just stay patient, set your alerts at this level. And then lo and behold, what happened? Price came up, tapped the level, and is now dumping back off. So that's the change in last week. We've got an entry on Pound Swiss. We still have this position running from the weekly for a 5.2. Same situation as the other prior positions. We've hit TP1, we've hit TP2 somewhere here, and now we're just waiting for TP3 for the last 1.3% of that total 5.2 R position. NJ on the 3-day. Since last week, we've hit TP1. So here's the entry from last week. Sorry, we didn't enter last week. We were in the position last week, but it was just sort of floating open. No TPs hit as of then. But since last week, we've hit TP1. So we've made 50% of 2.25, so 1.125. We just missed TP2. So TP2 wasn't hit. It was almost hit, but didn't hit. So we've not classed that yet. That's still open. But it looks like it's tweezer topped. Price will probably come back down and we'll look for another entry. But I'll update the VIP members on the placement of that. But yeah, profits secured here, running risk-free, and just waiting for price to come down, stack the entry, take it higher. NU, here was a losing position that we got out of early. So I'll go over the original position first, which would have just hit SL. Had we left it open, but we decided to close early. The VIP members were let know of that. So we had 1 touch, 2 touch, 3rd touch to make the trend. We had the EMA that was used as support multiple times on the 2-day. We looked for price to sort of coincide with that level. What happened within last week? So I don't think we were even entered last week. No, we wasn't. This happened this week on Tuesday. Last week on Tuesday. We had this level. Our aim for entry was for this level to get liquidated, but my hope was that it was going to come up and wick and then come back down. Whereas what actually happened was price had a huge bullish day and closed outside of this trend. So because the daily candle closed outside of this trend, that was not what I wanted to see. What I wanted to see was sort of price from down here shoot up, wick it, come back down and close within the trend. But that is not what happened. So I sort of treat that as price not obeying the confluence of the trend line. It's fine for price to come out of the trend line, but when you have a huge bullish push that closes price outside of the trend line, the context of that is the market is saying this is outside of the trend. I'm no longer in the trend. And then lo and behold, what happens? Price broke out of the trend, came down, retested it, and pushed higher. This is like a retail trader's wet dream, right? So you've got a huge bullish engulfing candle. You've got a shooting star candle. You've got a price coming down, retesting a trend and wicking off, making a hammer or a pin bar, and then you've got followed by a bullish engulfing candle to sort of consume this price. Like, that is classic retail candlesticks and trend patterns on the daily time frame. At the point price closed out, we gave the alert to the members at, I think it was like minus a third to close out. We said, right, yeah, price was around about here. In hindsight, I could have probably just set the TPs to entry and closed out at absolute zero. But there's nothing wrong with taking like 0.33% of a loss. Because if I were to have done the former, I would have also been gambling to lose 1%. So in my eyes, I've secured a 0.33% loss, but I did that by not risking 1%. So you could see the risk reward there of, would I rather secure 0.33 or risk losing 1? Obviously, I'm going to secure losing 0.33. So I think I made the right call there. This would have lost anyway, so I cut it short at 0.33%. So again, I think that is smart trading and proper risk management, which our strategy allows for. Final open position, we have USD Swiss on the weekly. Nothing really to update here. Last week was really bearish, which is good for us. So last week price would have been floating around here, and then since last week's video, the market analysis showing a bearish bias since last week's video. Lo and behold, we had a huge bearish week. So no take profits hit. We were already at 1-to-1, so we were already risk free. But in the weekly analysis, I called and said we've got a bearish bias, and then we had a huge bearish week. So you're welcome if you took any intraday trades off of that analysis. For us, we're just sort of waiting for this position to keep falling, which I believe it will. So that's all 12 open positions. You can sum up the changes in those which were called out last week, and you get about 2.5% positive. From swing trading, most people don't think people think swing trading is slow. Yes, it is slow, but it's low risk. It's smart. It's how banks and institutions look to trade on higher time frames over longer intervals, less volume, higher precision, higher conviction. So we made 2.5% since last week. Now I'll go over the free open positions that I'm willing to show. Any more, and you need to be in the VIP group where you'll get live updates on anything that I'm doing, anything which I change my mind on, anything that I update. And I'll also give my day trading strategies, and I'll also give my intraday strategy as well. So getting straight into it, the 3-day time frame, we have Aussie Swiss. So from last week, we learned that Aussie has got quite a lot of bullish sentiment, or sort of a market reversal based on our strategy. So this push up told us that the Aussie dollar is bullish. So I've raised my entry from what it was further lower. Since the sort of bullish sentiment last week, I've raised my entry, and I think price is going to push up higher than we initially thought. So the trend that I'm looking at is 1 touch, 2 touch, 3rd touch submit trend. Since this low is not lower than this low, I'm not taking a fib from there to there. I'm taking it from this daily high down to here. So based on that, based on our golden zones, based on our quarterly level, based on where the trend 3rd touch looks like it's going to meet in confluence with the EMA, all of that summed up all together, looking to the left of the price range that gives on the quarterly level, you can see we've got a support, 3 supports there, And that's really enough because it's on a higher time frame. We're really entering new lows here for Aussie Swiss. So based on that recent price, we've got 1, 2, 3 instances of support on the 3-day. Let's check it out on the daily. On the daily, 1, 2, 3. We've got all these wicks here where price came down, was supported. Then price was used as resistance twice. You see price barely closed above this level, even when it had a huge push up there for the day, barely closed above. So what we're looking for is price to now liquidate those highs. So there's a lot of stop orders there. We want those to get liquidated, touching the quarters level, then giving us the final push to trade below. But again, don't just set a limit here yet. We want to see the relevant candlestick rejections at that zone before we trade price lower. If we do, let me change my alert a little bit higher there. If we do have all that, we'd be looking at a nice 4.8 R trade. Sheaf JPY, this pair has been on an absolute tear. Like, this has been on a huge bull run, okay? And we're looking for that to continue. So again, we have 1 touch here, 2 touch there, 3rd touch to make the trend. We've got the 2-day EMA or the sort of 1-day 100 EMA to be supported again. We're looking for the fib from this daily open to this high. We're looking for the quarters level in that cluster of ranges. We've got price was previously used as support beneath. Now we're looking for it to be used as support again. This low is going to be liquidated by the time price comes in. Look for the wick rejections, and this will make a nice 3.9 R trade. Last but not least, we have Euro New Zealand dollar on the weekly time frame. Similar story as last week. No further updates on this. I believe we might have changed the entry a little bit, but I'm not 100% sure. Still same logic. We've got EMA being used as support multiple times. We have structure off to the left. You see that was a huge weekly level that got tapped there. Price came up on the weekly, orders got executed, price came below. You'll have a lot more instances when you're not looking on a weekly time frame. So you see here, you've got support, 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 resistance. So this same quarters level, 1.77. So this is a huge psychological number. Okay, this is very easy for banks to execute off of. It's a major level. It's a major ratio of Euro New Zealand dollar is the way to look at it. When it comes down to the discounted price, based on the trend, based on the EMA, we'll look for the wick projections and we'll look to enter for a nice 4R trade. So, hope this has been a very educational, free video. Obviously, free advice, free value. Can't really complain at that. You've seen the proof in the pudding. You've seen the sort of weekly delta from last week. You've seen me talk through the logic, the strategy, how it all works. If you want to see more of this, if you want more signals, if you want this strategy utilized on a smaller time frame for higher volume, faster returns, and then also how to utilize it on an intraday perspective, to get in and out of the market within the same day rather than waiting for days, weeks, months potentially, then you can join the VIP group. Since I'm relatively new to all this content creation side of things, it's relatively cheap at the moment. It's £40 a month. Obviously, the amount that you can make back from using this strategy on prop firms and with your own capital and compounding is absolutely phenomenal. Even if you're not placing live trades at the moment, it's a very cheap price to pay for education. I've been to university myself, got a master's degree, well, dropped out of my master's degree, but spent 5 years at university, got a first class bachelor's degree in engineering. And I can tell you now, I spent over 30 grand on that, and I've made a lot more money from this than I have from spending over £30,000 on my degree. So £40 a month is what I'm asking for the VIP, to sort of get in-depth analysis and updates and sort of timely updates from myself throughout the week and updates. updates, and also further insights on the strategy every single week, more positions to take, more analysis, more signals, more learning, more value. Link will be in the description. Hope to see you guys in there, but till next time, I'll see you next week.